What is an APR?
So an APR came out years ago, and it's so that you can see a relationship between the interest rate that you got, that you're paying your loan back on time, and the amount of closing costs it took to get that rate. So the APR is going to take into account the first year's interest, then we're going to add in all the other closing costs, pretend that that number is interest, and then see what kind of rate that would correlate to for the first year.
You're supposed to use it to compare a lender to a lender,
Right.
but no one really does, and it's just a confusing number. So our interest rate is 6.5%. How much annual income do I need to buy that $260,000 house?
So a whole nother conversation that we're going to say for another day is the down payment, because there's down payment assistance programs, and this
Yeah.
one is 3.5%, and the closing costs, the sellers can pay closing costs. But for this example, with $550 a month in debt, regular standard FHA loan, there's a bunch of different types of loans. I figured that's going to be on the high end about $62,000. So 60 to 62.
So if you're earning 60 to 62,000, you could probably, if your debt's around that 550 a
Right.
month and your credit score's good, you could probably afford around a 260,000.
And that's household income. So if there's two of you that are going on the loan, that's two people.
So if you're making more, all the better. It's going to
Heck
give you
yeah.
a lot better cushion. And you know, for another day is what you can qualify for and what you think you can afford a month.
Yes, and
But-
the other thing too is comparing the FHA to the conventional loan. The FHA certainly has its advantages, especially for first-time home buyers. But if the debt to income ratios are a little bit lower, credit scores higher, you might want to consider a conventional loan. So
Right. So, but what's this payment going to look like?